is the Lebenthal Report with Michael Hartzman and Dominick Tavella. We'll break down the news, trends, and overall direction of the markets, telling you what may be coming next, investment opportunities, and what to avoid. Now, here are your hosts, Dominick Tavella and Michael Hartzman.
All right, I'm Michael Hartzman. Today is Tuesday, January 11th, 2022, and I'm here as always with my partner, Dominick Tavella. There you go, Dom, live podcasting, and the house phone never rings and right on cue.
Well, there's no ambiguity anymore. It's live, it's unrehearsed, and we take things as they come, including the ringing phone. So I won't say I turned mine completely off. I hope I did, but we got much better things to talk about. So another week in paradise, Mike. These markets, talk about volatility. My God, everything we left behind last year is taken off this year.
You know, so I looked at the statistics of where the market closed last week, and the NASDAQ in the first week was down 4.5%, and the S&P 500 was down 1.8, almost 2%. And you know what? In 2 days, we've made back a third of that. So yeah, the volatility's been all over the place, and the inflation story popped up again. But and you almost get the feeling, Dominic, that this resilience of the market, you almost grow to expect it. And when we don't get the resilience, you wonder what's wrong.
Well, we've talked about this many times, Mike. We went all of last year without the S&P being down more than 5%. All of last year. Again, just talk about what we went through with COVID and politics. And then the NASDAQ, I think the most, we were down maybe 8%. Well, 4.5% down this year, but from its high, the NASDAQ at its worst was down about 9%. The S&P a lot better, holding up a lot better, particularly because of energy and some other sectors of the market. But I think this year is, unlike last year, is going to be very volatile. I think at the end of the year, we end up on a plus side, but I think the in-between, I think there are going to be days where it might get a little rough for people to watch.
You know, when we had Mira Pendant on last week from JP Morgan, she indicated that as well. And I agree with you. And in spite of that volatility, JP Morgan actually came out with a call this week that I saw online, and they're particularly bullish. So we actually gave our viewers a little advance notice on that. But yeah, we're going to get more. We're going to get volatility. There's no doubt about it. And I think one of the reasons is if everything is going to be pegged to the 10-year interest rate, that is so visible every single day that if it moves 3 or 4 or 5 basis points in a day, the market could react to that instantaneously. And I think that's what's different.
You know, Mike, I brought up last year's relatively low volatility. You and I have been in the industry for over 30 years. 10% corrections were kind of normal, right? Nobody likes them. Nobody likes living through them, but you kind of accept it that this just kind of normal in a year-over-year market. And then we think got away from that, where the markets were much more stable, putting 2020 aside with the big scare in March. But I think reality comes back. And the reason we talk about it so much is if we prepare people, if we make them aware, if we kind of dictate what might happen and get them comfortable with the idea that in the end, it'll all be good. But in the meantime, it's just going to be a lot of ups and downs. Then they don't panic, right?
They don't panic. And I think especially our clients, most of our clients are generally skeptical anyway, and they're pleasantly surprised when we have a good market. But a lot of them have been saying to me for years that they're waiting for the other shoe to drop. They don't know what the shoe is, but they're waiting for the other shoe to drop.
Yeah, and Mike, I don't want to spend a lot of time on this because we've talked about it in past shows, but we know what happened March of 2020, where a significant number of people got completely out of the market, of course, at the dead bottom, right? No one gets out at the top. And then they didn't put their money back in the market at all, or didn't wait until the market had full recovery. So we just don't want not only our own clients, but people that are listening to the show understand there's going to be a lot of noise out there. There's going to be a lot of headline risk. And with that is volatility, right?
So speaking of volatility, you always give me a great segue because you're an old TV veteran. Speaking of volatility, we have finally someone on our show to talk about cryptocurrency. And geez, since crypto popped on the scene several years ago, I think volatility is the best way to describe it. So tonight's show, Dominic, is not about whether we're recommending anyone who's listening, any of our clients should buy crypto. We're not recommending it, endorsing it in any shape, way, or form. But we've been anxious to do a show that's basically Crypto 101. And we have a great speaker tonight, Kevan McConlogue, who's director of hardware at Overline, who's agreed to do exactly that, Crypto 101, which I'm really excited to get into.
And Mike, is there any subject matter I think that we get more questions about than Bitcoin and the other cryptocurrencies? So I think we're going to have a little fun with it tonight. We're going to try to enlighten, I think, me more than anybody else, but I think we're going to try to have a little fun tonight and see if we can provide a little knowledge to our own clients and any other listener that happens to be listening to the show.
Well, that's the plan, and we will be right back right after this break.
All clear.
All right, I'm Michael Hartzman, back with Dominick Tavella, and our guest this evening is Kevan McConlogue, director of hardware at Overline. How are you, Kevan?
I'm doing great, gentlemen. Thanks for having me on the show.
Welcome, Kevan.
You're welcome.
Thanks for having me.
So, Kevan, we've been doing this show for about a year, and I finally get to ask the question, what is cryptocurrency? Just 101, what is it? How does it work? And why is it so important right now?
Cryptocurrency is definitely exciting, and in my field of industry, obviously very important. It is separate from blockchain. So to answer your question on what is cryptocurrency, I want to kind of differentiate those two, and I'll give a little background on blockchain and then a little background into what the crypto side of blockchain is, because obviously that's kind of what everyone's talking about. That's most of the fuel of this excitement in the industry right now. But to roll it back towards the blockchain side of things, my history is all in the development of blockchains. So I do more of that than the actual like cryptocurrency part. We've got guys at my company that are experts there. But the blockchain side, honestly, the best way of describing this is somebody sat down at a computer and said, why do I need to go through all these hoops to trade a simple stock? And the easiest way for them to do that was to create an alternate system, that's these blockchains, that doesn't have the same hoops or limitations or certifications that a normal system would. So think of the Bloomberg terminal versus your cryptocurrency portfolios. A lot of those, if you look at the trading platforms today, a lot of those have been set up to look similar to the original Bloomberg terminal because it's a familiar face to these things. But cryptocurrency was designed to just be on its own, unregulated means of transacting finance for anyone that's interested in transacting finance.
So blockchain is the tunnel, the secure tunnel. I think that's what's always touted, that the information is secure and theoretically bulletproof, that we can transfer it from point A to point B. And I can see the value, especially in today's world where, cybersecurity is so important. But now we got this coin, and how does the coin connect to blockchain?
The coin actually gives you something to do with the blockchain. The blockchain side of things is secure, but the way it secures itself is through this anonymity and publicized nature. So it scrubs everyone's names from their accounts, but then shows the world everyone's accounts. And so technically you can go look up anyone's Bitcoin account, anyone's Bitcoin wallet. You can go find them on the blockchain. There's just no name that identifies who owns this asset or that, account. And that's where people get the anonymous side of blockchain. But then the coin side is, what else are you going to do with the initial startup software? The easiest thing is literally moving numbers. It's like email that's even simpler than an email message. I can shoot you a note, but that requires all sorts of characters, and for the computer system to understand how to transfer all of those characters in the right order. A number, as far as a computer is concerned, is kind of the basic construct outside of ones and zeros. It's the next step and complicated for a computer to understand is just the number 1 versus the number 2. You know, if I send you 2, you now have +2 to you and -2 to me. And it's literally just the easiest thing for a computer system to do. And so therefore that's where cryptocurrency started.
But somebody's got to do that transaction, that calculation, correct?
Yep.
And they get paid to do it with a Bitcoin or one of these other financial instruments.
Absolutely. That's the incentive model behind this system versus a traditional system. So the real crux of the difference between my bank account and the blockchain is that the responsibility for secrecy and protection rests in different parties. At my bank account, it rests with the bank. They have all of my information, all of my account information, all of my personal information, all the KYC relating to this. And it's their responsibility to safeguard that from the ills of the world. In the blockchain sense, everything gets scrubbed to anonymity. And then the responsibility falls to the actual miners that are producing these blocks. And they tie all their computers together through the internet to kind of war with each other to produce the next block. And that competition is where you get the security.
So I'm glad you used the word miner, because that was exactly my next question.
Yeah.
It's not 1849, right? These are not people with gold pens and you know, visors on. So what does it mean to mine cryptocurrency?
That is an absolutely great question.
Thank you.
The idea behind mining is, in my opinion, it's a poor name for what's happening, but it checks all the fun boxes, and a lot of this industry works on fun, and we've all seen that in dog coins and meme stocks. So the fun shouldn't be discounted, but what's really happening for these computers is every computer on a network is basically just competing to solve a math problem with all the other computers. And the catch is, where you and I are used to solving a math problem at school that has a correct answer, these problems don't have a correct answer. They have a close to correct answer. So it's one giant game of horseshoes that these computers play over and over again, trying to get closest to a point they'll never actually get to. And that's the competition part. And the math behind it usually stems from different curve systems. And the idea there is that, like, you can divide a circle in half, and then you can divide half of a circle in half, and you can divide half of a circle in half, and you can keep doing that to infinity. And you'll never actually travel the whole length of the circle, and you'll never run out of the circle from a mathematical point of view, because you can always take whatever answer you have and divide it in half again. And that's you try to get close to a point that you know you'll never actually reach. And that's what these computers are doing. Now,
So just a follow-up question, and then Don, I'll turn it over to you. So when crypto is traded, and there's obviously a price set, right? There's a buyer and seller, just like what Dom and I do on other investments. So is what you're describing is one miner is the bid and one miner is the offer, and that's how this price is arrived at?
It's even simpler than that. Let's go to the ledger system. So let's say you got your public blockchain, and the blockchain is comprised of a series of historical trades and transactions. The next trade and transaction is going to be something that needs to fit into a block. And what the miners are doing is they're actually building those blocks. And this is where the competition part comes in. And this is where you get, there's an interesting transition between what we're talking about now and the world of NFTs here. But the miners actually go to a collection of available transactions, and that's where your trade would go. So if Michael, you're trading with Dom, you would post your trade. Along with your trade, you would post what's called a gas fee. And that's what you're paying to have a miner take your trade and stick it in the next block. And so the next block is then, we'll just call it the next page in this ledger of all the trades that have ever existed. So the mining actual part happens over and over again as all the miners gather up the the trades they want to take with the fees associated. And under this agreement, they collect those fees, but only if their block wins. So they
fees
show up.
are in crypto coins, dollars, euros.
Yes. The fees are going to change based on what blockchain you use. But let's say Bitcoin. There's the simple one. You pay fees in Bitcoin. So if I were to send you $1 worth of Bitcoin, it would probably cost me 17 cents, between 17 and 20 cents maybe, depending on how high the other fees are. I can obviously increase my fee. So I could pay the miner $100 to take my $1 worth of Bitcoin and send it to you. And I can almost guarantee my trade will be in the next block, because some miner is going to see that and say, ooh, I'll take your $100. And they'll put it nice and neatly in the next block that they're going to petition to the blockchain. So they're just collecting your trades based on who's got the highest set of fees. And every block has a maximum number that you can fit in there. So these miners fill up their blocks to the maximum, collect as many fees as they can, and that's when the competition starts. They try to solve the math problem that says, my block is the best, it's got the closest answer, I win. And then when everybody agrees, well, yeah, that is the closest answer, your block is the next ratified one. At the same time, Michael, your trade with Dominick goes through.
So the miners are the market makers of the cryptocurrency world.
The miners, and this is where the name does become more appropriate. They're the ones in the trenches. They would be like the guys on the trading floor, taking one person's trade and handing it to the next and collecting this person's and filing it there. They're the ones that are actually the monkeys in the system, essentially, where they make the whole thing possible. Without the miners, you don't have a blockchain and you don't have cryptocurrencies.
But they may be the monkeys, but it sounds to me like they're making a fortune.
They're making an absolute fortune, because along with those fees they collect on every one block, usually there is a block reward as well. So I think the current reward for Bitcoin is 6.2 Bitcoin per block. And so every block they win, that's just 6.2 Bitcoin credited to their account.
So I just want to back up from it so I make sure I understand it. So if I need this transaction done, I'm a financial institution and I need this transaction done, I'm paying somebody, we're going to use Bitcoin for this example, but I'm paying somebody with Bitcoins or a fraction of a Bitcoin to actually do the transaction. That means I got to go buy Bitcoins, correct?
Correct.
And that's where the value of the Bitcoins comes from, that I need to go and find them and acquire them?
The value of Bitcoin is a much contested topic, but I do have my own dual opinion to this. On the one hand, it can cost me 17 cents to send you $1 worth of Bitcoin, but Bitcoin doesn't actually care if I send you $1 or $1 billion. So if I send you $1 billion worth of Bitcoin, I don't have $1 billion of crypto, but if I did, and I was sending it to you because I'm a nice guy and you seem like a nice guy, it would cost me 17 cents. The system doesn't care.
Because it's just zeros and one, right? It's a mathematical.
It's no weight to them. There's nothing, just sure, transfer a large amount. That's one source of value. Is the barrier to conduct business is dramatically reduced. The second source is, if you harken back to the .com boom, like all those guys were jokes. They're all high school dropouts. They're all starting technology nobody else understood. And a lot of them started companies that didn't make it. So Netscape coin won't make it. Neither will Ask Jeeves coin. There's just, they don't survive. But the surviving coins and the surviving blockchain systems, those are going to be the ones that, in 15 years, we're all laughing about how we should have invested in Yahoo, or we just go put $100 in Yahoo now. But the level of talent is what I would be watching as a value indicator. Where are the high school dropouts going now? And a lot of them are going into cryptocurrencies, crypto trading, NFT generation, blockchain support. Like it is a growing field, and there's not a lot of people in it.
So Kevin, just to be clear, Bitcoin is a type of cryptocurrency.
Correct.
It's not the proxy for crypto.
Correct.
There are, I guess, at this point, hundreds,
Thousands, right, Kevin?
variations of
Thousands.
crypto.
Thousands, Mike.
Thousands.
Yeah.
So that's where our clients don't stand a chance, right? Because they don't know which one to buy, or they just buy the Bitcoin or the Ethereum, whatever their grandson tells them to buy. So what we have seen on our side of the business, you see a company like Goldman Sachs coming out with the equivalent of an exchange traded fund. You see Wisdom Tree coming out with one. So is that kind of the next iteration, in your opinion, Kevin, of making crypto more mainstream, where our clients and the general public doesn't have to worry about figuring out which are the winners and losers in crypto?
Absolutely. So the next wave, the next kind of like phenomenon around this is going to be knocking down walls. Right now, it's a sort of easy industry to get into. Like a lot of the exchanges have made it pretty simple to sign up an account, do the simple KYC, you can get a bank transfer, credit card, and buy crypto that way. Our company's got some credit card portals set up, and there's a bunch of other companies that have the same. So these opportunities exist. Where then it gets confusing is what you do with that entrance, and how are you supposed to know when to trade it, how to trade it? Is this an investment, or is it a day trading event? And that's going to be something that honestly, you guys as experts, I think, are going to be the field leaders in this. It isn't any different from trading stocks. There's just kind of a 24-hour, 7 days a week notion to it. It never stops.
So Kevin, I guess I'll say mine, but I'm going to guess also Michael's biases. We both lived through the .com era. I like to call it the garbage.com era. And you already hinted at it, right? I mean, we can look now and go, wow, look what the internet has accomplished. I mean, it has turned our world 180 degrees upside down. And I'd like to think for the better, right? And the companies that were born, maybe some of them weren't even born at the height of that era, they've become ginormous, right? We could talk about Google and Facebook. But there were many, I don't even know if we can legitimately call them companies, pretended to be companies, some of them publicly traded, that just were a disaster. And in fact, you can argue most of them were a disaster. So today, how do we figure it out? How do we know which ones are the legit players and which ones will just go completely by the wayside?
So there isn't a good way of doing this, but there's some good measures that you can take that will help you make the best decisions possible. And there's a common phrase in the industry called DYOR, and you'll see it in chat groups and chat rooms. A lot of you enter those, and it just stands for do your own research. And it's mostly people that are saying that as a CYA methodology, and I'm happy to use it here as well. I obviously am biased towards my company, but I'm not going to advocate for any of the cryptocurrencies on this call. I will say, though, that in the industry, there is a standard around things like white papers and work history, and neither of those should be discounted. If you can find out who's running the project, who's developing the project, what their work history is, what else they've worked on, the history of those projects, as well as what we call the white paper on the project, which is the kind of basic description of how the project on a blockchain on a software level works. And it would be what you would, read as the basic, bio for a company. This is what they're planning to do. This is what they're interested in doing. This is how they're interested in accomplishing things. This is how they're different from other companies or other blockchains in this case. The white paper is supposed to be a summary source of information that you can start making better decisions on. Either dive more in depth, research this more, or like, this isn't a coin I'm interested in, or I don't see a use case, or I don't see it advancing. So between those two things, that gives you a leg up in terms of like how to select a project. The big ones right now, though, are easy to kind of identify based on their market caps. And I would recommend going through CoinMarketCap is a pretty standard industry place. It's been bought by one of the exchanges last year, I believe. But it's still known for its integrity outside of a short hack that happened in December, I think, where the price of Bitcoin went to $1 trillion or something like that. And everyone was huge winners. It was very exciting for a couple hours.
Kevin, we are bumping up against a break. When we come back, I want to talk to you about the practical uses of Bitcoin, the future of Bitcoin as actually, what currency is in it. I mean, is it really a currency? Could people buy things with it? So these are the questions Dom and I get from our clients. And when we come back on the other side, we'd like to get into that a little bit more with you as well.
Looking forward to it.
So we'll be right back.
I just
You are
turned
listening to the
50.
Lebenthal Report. If you're listening to the show
Explain.
live,
Angry
join in
grandfather.
on our
And
discussion
younger
with
partner.
questions or comments at 1-866-472-5790. Again, that's 1-866-472-5790. You may also send an email to contact@lebenthal.com. Now, back to the Lebenthal Report.
All right, I'm Michael Hartzman, back with Dominick Tavella and our special guest tonight, Kevan McConlogue from Overline. He's the director of hardware. Kevin, the way that I always explain to my clients whether they should be buying crypto or not, and inevitably the call starts the same way. My grandson made a lot of money, or granddaughter made a lot of money buying crypto, and he wants me to take some of my money with you and buy cryptocurrency, and should I? That's normally the conversation. I've had it 100 times. Dom, I'm sure you've had it 100 times as well. And in the way that I try to explain crypto in my very layman basic way is, until crypto becomes less volatile, I don't know how you really call it a currency. And the best example I give, if I go tonight and buy a car for $40,000 and pay for it with cryptocurrency, and tomorrow my crypto is worth 10% more, I'm going to feel like an idiot, right? So I just overpaid for my car. Conversely, if it goes down 10%, the dealership's going to feel like an idiot. And quite frankly, that's no way to run a business, right? So that's how I explain it to my clients in terms of, when will it become more ubiquitous? When will it become more commonplace? And I just want to get your reaction to that. And where do you see crypto going and how does it become a more useful entity as opposed to simply a utility that I look at it as right now?
I love the example of buying a car, because I recently did that, and I'm always flabbergasted at the value of my car the moment I roll it off the lot. It's always feels like a highly volatile asset as soon as that happens. But cryptocurrency is a currency because of its value store nature. However, I get your point of, like, how do I know how to spend it wisely? Because it feels like if I had bought the first Bitcoin pizza, which, are you guys familiar with that story?
No.
I've heard it, but it's worth telling, Kevin. It's worth telling.
All right, it's gonna hurt because somebody out there is hurting bad. The very first Bitcoin purchase was a pizza, where the guy convinced his delivery dude to accept Bitcoin for this pizza, and he paid him 15,000 Bitcoin for the pizza. I hope that pizza guy has all 15,000 coins, because he's loving that day. That's the best day ever. Now, I hope that was a really good pizza. I don't know if you could ever have a pizza that was worth 15,000 Bitcoins in today's terms, but to your point, like, that's a painful decision in terms of spending those coins. But the beauty of cryptocurrency is it really just shortens the distance between you and your finances. So in economic terms, sunk costs are sunk costs. If you buy the car, it's because you needed the car that day. If you don't need the car that day, wait for tomorrow, or pull your money out of Bitcoin, out of a cryptocurrency, into something more stable. And there are cryptocurrencies designed for that. So there's pegged currencies, $2 or euros, and they're called stable coins. And you can switch your crypto from Bitcoin, trade it into a stable coin, and leave it there in a less volatile sense. But you've never actually left the cryptocurrency sphere, and you're still in crypto blockchain backed assets. But once you spend it, then that's your trade. So when I bought a car, I did cash out some crypto to purchase the car. And I think it has gone up and then down. So I was sad for a bit. Now I'm happy.
Got it. Got it. So just out of curiosity, for the benefit of our listeners, what are those 15,000 pizza Bitcoins worth right now?
Right now, I'm gonna run the numbers. Bitcoin's at $42,000. So 15,000 times 42 is 630 million.
So Dom, you're a pretty good tipper. I've been out with you plenty of times. Have you ever given a $630 million tip?
Look, I've heard this story, right? So I'm not quite as shocked. And there are other, somewhat horrific stories like that. People losing their Bitcoins because they are secure and they can't remember their passwords. And that's part of it. But, I guess the part I'm struggling with, Kevin, is the valuation and how subjective it could be. And I always compare it to with clients, it's a Picasso painting. You tell me what it's worth, right? And somebody might value it more than somebody else. But if I'm a business and we just describe this transaction and I want to create this, I have to go buy Bitcoin. I can see where there's a value for me buying that coin and then using it to pay some group, some miner, to execute this transaction. But if I'm an investor, isn't it really subjective? And how do you determine that this is an investable asset?
Well, I can't provide investment advice, or I'm going to avoid doing that. So caveat.
I'm just trying to understand.
Yeah, to answer your question, a lot of these coins are given a purpose. And unfortunately, I can't tell you what Bitcoin's purpose is because we can't ask the founder or founding group. And that's a unique attribute of Bitcoin. There isn't anyone to kidnap that will affect the price of the coin. They're
and perhaps, Kevin, I'm going to interrupt you. We should use some other, because we said there are thousands of these coins out there. Bitcoin probably being one of the better known ones, but we could use any one of these coins as an example here.
So let's jump to the next one in the tier of market cap, which is Ethereum. And that there is a known dev team, there's a known founder, there's people that are doing updates on the system even now. They're overhauling the whole thing to provide more features for their users. But the value store is in people using it. So I would argue things like Bitcoin one day will kind of flatten out. It will have a global value that it doesn't go beyond, because Bitcoin itself has a finite limit. Those miners that are mining things, they're being rewarded, and about every 4 years, that reward is cut in half. And once it hits a certain number of blocks mined, there's no more reward at all. It's gone. And if at that time, Bitcoin isn't a world phenomenon and used everywhere or held as a store of value, then the miners are going to stop dropping off, because the only way they would be making money at that time is on those transaction fees, the 17 cents here and the 17 cents there. Obviously, they'll be hoping it's more than 17 cents. And Ethereum is a great example. Ethereum has all the NFTs, based on it, as well as some of its sister chains. But those fees have gotten as high as like $1,800 for a single transaction, just to send. If you're buying coffee with it, it's not practical, not at those values, but the miners are very happy. So to answer your question on, is Bitcoin an investable asset? Right now, there's about 40 million, I think was the number I looked up earlier, for active Bitcoin wallets. But 40 million is, the people in New England. As the world adopts this and it becomes easier to get to and more friendly to use, and something that it's, become accustomed to have on our phones, like Samsung already puts in all their latest phones a blockchain wallet so that you can store crypto right on your Samsung phone.
Any crypto.
Anyone that's supported by their wallet, which does hit all the majors. So they've got Bitcoin and Ethereum, the major group set, but it's not all several thousand coins. But as that grows, it would be like saying, how valuable is gold if we made sure that everybody had at least an ounce of it?
Right.
At some point, you're going to want to do something with it, and somebody's going to want 2 ounces, and so they'll take your ounce for something.
So Kevin, one more question. I know Dom and I want to leave some time to talk about NFTs, which you've touched upon briefly. So in your opinion, do you ever see either a group of governments or a government, where again, whether it's the Euro and us and the Chinese, you ever see any entity formed to regulate crypto, which I know the people involved in crypto are adamantly against, but do you ever see crypto being unified and regulated worldwide by a particular agency or currency?
I think the attempts will be made all over the place. However, cryptocurrency, because it's all public, it's hard not to just say you can regulate it. And where governments may step in would be like asking, we need to know which address is yours so that we can associate your name with this address. But right now they can go look up every single address on every single public blockchain with every single transaction available right there. So
But no name or corresponding ownership detail.
Correct, which first drew several criminals to cryptocurrency, and then the FBI figured out, well, all you need to do is crack one of the addresses, then anybody that has money that touched that address is also a blacklistable address, and then you can blacklist those with the exchanges, and there's no way to get your money back into real dollars.
I apologize. I know I said that was the last question. What about, how do you tax it? If you can't track there's no name attached to the purchaser or the seller, how do you tax it when you sell it at a profit? They pay
where you're selling these things are usually on exchanges. So where the country and the government steps in on that, I don't want to piss off a bunch of countries by dictating their tax codes. So in respect of that, they'll need to make their own decision. What I can say is any sort of point where cryptocurrency and fiat currency are currently touching, there are KYC involved. So that there is an entity there that has both tokens, your personal information side and what your crypto information side is. And I can add an addendum to that, which is the SEC has stepped out and only commented once officially on cryptocurrency and what asset class they are classifying it as. And that was, I'm going to try to paraphrase without butchering the actual statement they've made, but it was any cryptocurrency that is as sufficiently decentralized counts as a property, as I recall, or they're taxed as a property, which would put it in the cap gains when you sell it back into USD realm. And then the examples they provide for that are Ethereum and Bitcoin. Okay. So a cryptocurrency that is as sufficiently decentralized as Ethereum or Bitcoin, the SEC considers property and not, I guess, a stock.
So one last question on my part. So, Jim Rogers, the famous billionaire investor, warned us that I think it was over a year ago, right, Mike, that,
yes,
hey, the minute China decides that it doesn't fit their financial model anymore, they're just going to outlaw it. And in fact, they did. Is that a danger going forward, that countries in an attempt to control their own currencies and their own economies just come along and go, no, we're not going to let you do it?
Well, yes and no. The first time China outlawed cryptocurrency, we're pretty sure they were buying the dip because they noticed they held enough sway. It's like Elon Musk with Dogecoin. I don't know his assets or his holdings, but I know he can stand up and say, I hate Dogecoin and everything's terrible about it, and the price of Bitcoin will go down. That could be interesting and relevant to him. And then he can stand up and say, never mind, Tesla's going to accept Dogecoin, and the price of Bitcoin goes up. Now, Dogecoin is doing more, but the SEC has already scolded him for tampering with the public markets through Twitter. In that case, he's only messing with Dogecoin, but it has the opportunity, we all have the opportunity because it's public Twitter, to make investment decisions or purchase decisions based on those, on the Bitcoin side of things. So the idea that cryptocurrency is at risk from an entire government is absolutely something that you should take into your trading portfolio. And I know that there's a lot of automated bots and trading systems that factor that in. Like recently, the unrest in Kazakhstan that caused the internet, service providers to shut down the web, which is a whole other conversation. That actually damaged the miners that are mining Bitcoin, because there's a bunch of them in Kazakhstan. So they were all disconnected from the network. And what that caused was a drop in the difficulty of Bitcoin, and people got concerned. Miners were turning off their Bitcoin miners and were going to go to some other blockchain that they thought was more valuable. And that gave a perceived loss of value in Bitcoin that was recovered once the miners got back online.
We got a minute and a half. NFTs, non-fungible tokens, go.
Yep. NFTs are non-fungible tokens, which is a fancy way of saying it's just like your Bitcoin balance, except it may have a representative asset in the real world. And instead of being on your computer screen as ones and zeros, it shows up on your computer screen as a picture or a GIF or a little video. You can trade them, you can sell them, you can mint them like you can mint a crypto token. It's almost no different, except it has some sort of real world tie, usually, either in an access or in an actual asset, like part ownership of a painting.
But if you,
The way I describe them is
go ahead, Dom, go ahead.
electronic. Sorry, Mike. The way I describe them is like an electronic baseball card from when we were kids. Is that is that accurate?
Perfect. Very accurate. Yeah.
So you can take a piece of artwork or somebody's signature or
You could
a piece of a movie or music or anything.
you could take
electronic.
go to a vineyard and you could NFT their bottles of wine, and whoever buys the NFT will be mailed the bottle of wine.
Very
Kevin,
cool.
we normally do these shows, and by the end of them, Dominic and I have a few questions left. Tonight, I feel like I have 52 questions left.
Sorry.
And we are out of time. So we always tell our guests we want to have them back, and we always do. And we definitely want to have you back, because I really do have 52 more questions.
Yeah, I think we've made. I've made progress. We've made progress, Mike. But we have I think we have a long way to go.
We have a way long way to go.
I'd love to be back. 52 is a great number. That is the number of characters in a Bitcoin private key.
There you go. I learned
Can't
something.
remember my telephone number, Mike.
Well, you don't want anyone to guess this PIN number.
Yeah, good luck with that. Kevin, thank you so much. I mean, I think you helped us a lot. I think we just have to have a long way to go. So, but you've added some light to the whole picture and the whole question. So thank you.
Happy to be here. Love to come back. Thanks, guys.
Thank you, Kevin. We'll be right back.
Yeah, I was dying to ask about Coinbase, because I really think that, and I'm going to guess that was his point. The real value is in the exchange, right? Where you can buy and sell these things.
The exchanges are
money
making
on the buys and the sells.
Yeah, the exchanges are making crazy fees.
Kevin, thank you. You can stay on. But
You are listening to the Lebenthal Report. If you're
I'd
listening
love
to
to
the show
listen, so I'll
live,
stay, but I'll mute.
join in on our discussion
No
with
problem.
questions or comments at 1-866-472-5790. Again, that's 1-866-472-5790. You may also send an email to contact@lebenthal.com. Now, back to the Lebenthal Report.
All right, I'm Michael Hartzman, back with Dominick Tavella. Do a quick wrap up. Dom, I think Kevin was great. I think he explained things in a very logical, plain spoken way. And I have to admit, there were a lot of misconceptions I had about crypto and how it worked and how the mining works. And I'm glad we had him on, and I'm glad he helped straighten out a couple of misconceptions.
I know it did for me, Mike, and I'm not embarrassed to say it out loud. And at least there's a certain level of understanding right now why somebody might want to, especially an end user, might want to buy a Bitcoin and then use it to transact something. So I see the value there, and obviously the supply and demand question makes it more or less valuable. So at least conceptually for me, it's starting to make some kind of sense. As far as an investable asset, I think even Kevin alluded to, there's a big question mark right now, depending on which coin and who's mining it and what exactly is behind it. So it may not be quite the Wild West that it was, and it might be becoming more mainstream every day, which I think is a positive. But I think we also have a long way to go.
Oh, we definitely have a long way to go. But I have to tell you, when I use the analogy of a car, and lo and behold, Kevin paid for his car, and he talked about, he moved his crypto to stable coin, which I heard that expression. I had no idea what the purpose of it was. So that kind of makes sense to me now, because what's the exit strategy, right? You buy these cryptocurrencies. And the other thing that we didn't get to ask him about, and you alluded to it, is, if someone has $1 million of cryptocurrency and they lose that password, do they literally lose access to their cryptocurrency?
Yeah.
That'd be an anxiety attack. So, we definitely have to have him back. I definitely have more questions, but like I said, when he explained stablecoin, okay, now I understand the exit strategy. How do you buy something in stable coin is that kind of gateway to liquefy your crypto.
Well, and I'll take it a step further. Again, this is a little bit more clarity for me, but you and I have both traveled to Europe. And when we go to Europe, we want to do business. We want to pay at a restaurant, and we want to buy some clothing at the local store. You have to buy euros, right? And then you buy euros, you now can transact. You can have financial activity in that country, right? But you show up with your dollar bills, it doesn't work. So from a business owner, if I want to create this transaction, I need to go buy one of these cryptocurrencies in order to get my transaction done. That kind of makes sense to me. As an investor, I can see why people buy euros or yens to think about, well, the value might go up or the value might go down, but I still am uncomfortable with the volatility. And I think until it stabilizes a little bit, we're still going to sit on the sidelines and watch.
And I have to give you credit. When we're talking about NFTs, non-fungible tokens at the end, and you basically said, well, Kevin, it's like an electronic baseball card. That was like an epiphany for me. It's like that I could understand.
Well, you have a lot of artists that are putting their work out. You have sports figures that are putting out, whether it's it could be literally a play that they made or their autograph, music. I mean, I can see where, for the purpose of this discussion, the artist community, but it could be other avenues, can directly market their wares. There are issues here too, including a lot of the stuff being ripped off, right? Trademarked. But it's a market for, at this point in my head, art and other pieces that you could own as an individual. And you and I grew up with baseball cards, and we love to collect those things.
You're right. And, to further your example, the Green Bay Packers, and I think the Boston Celtics are only two major sports teams that are publicly traded. And you could, if you're lucky enough, Packers don't really ever turn over, but you could buy a piece of the Packers that way. So that's a good example.
Brave new world, Mike. You think we've seen, I mean, we're kind of old fogies at this, but you think we've seen everything, and there's a whole new frontier right in front of us.
So Dom, this was a lot to unpack tonight. I'm glad that we did the show. Again, you and I talked about it a while. So I'm glad we had Kevin on. I think he did a great job. We'll definitely have him back, but we are out of time.
We have to have him back. There's so many more questions, at least to help me, and perhaps some of our other listeners. But yeah, let's get him back soon, Mike.
Absolutely.
Great topic.
So we are out of time. We'll see everyone down the road, and have a great night, my friend.
Be well, be safe, stay healthy.
Good night, everybody.